When it comes to improving your credit score, most people think only about paying bills on time or keeping debt low. While those are absolutely important, there's another powerful tool that can dramatically boost your credit profile, and that is a credit limit increase. In 2025, understanding how this works can be the secret weapon that separates average credit scores from excellent ones. So, what exactly is a credit limit increase? Simply put, it's when your credit card company raises the maximum amount you are allowed to borrow on your card. For example, if your credit card had a $2,000 limit and the bank increases it to $5,000, your available credit instantly grows. Now, here's where the magic happens. Your credit utilization ratio, the percentage of your available credit that you actually use, drops. And since utilization makes up a big part of your credit score, lowering it means your score goes up. Let's take a real-world example. Imagine you owe $1,000 on a card with a $2,000 limit. That means your utilization is 50%, which is considered high. If the bank increases your limit to $6,000, suddenly your utilization drops to just 16%. You didn't pay off a single dollar of debt, but your score improves because the ratio looks much healthier. That's why so many experts call a limit increase a score hack. But here's the secret: in 2025, banks are using smarter algorithms and updated risk models to decide who gets approved for a credit limit increase. They look at your payment history, income, spending patterns, and even your overall financial behavior. If you want to increase your chances, the key is to show consistency. Always pay on time, avoid maxing out cards, and if possible, set up automatic payments. Another tip: don't request increases too often. Instead, ask strategically, maybe every 6 to 12 months, especially after a raise or when your credit profile improves. Now, let's address the common fear: will asking for a credit limit increase hurt my score? The answer is, it depends. Sometimes a bank will do a soft inquiry, which doesn't affect your score. Other times, they may perform a hard inquiry, which could cause a small temporary dip. But in most cases, the benefits of a higher limit far outweigh the short-term impact. Over the long run, your score improves because your utilization ratio stays low. Another hidden advantage? A higher credit limit also gives you more flexibility during emergencies. It doesn't mean you should spend more, but having extra breathing room can protect you financially when unexpected expenses hit. However, remember, this strategy only works if you're disciplined. If you use the higher limit as an excuse to overspend, you'll do the opposite of what you intended and end up with more debt. In 2025, the smartest move is to use credit limit increases as part of a bigger strategy. Keep utilization under 30%, request increases at the right time, and treat your higher limit as a credit score tool, not extra cash. If you play it right, this simple adjustment could be the secret that takes your score from average to excellent. Right finger, so, are you ready to call your bank and request your increase? Or will you wait until your bank offers it automatically? Either way, now you know the secret.